Well, I think we're actually reassessing the recession risk
Ah,
just a little bit.
right.
I think so. When the recession fear reached its peak, which was sort of at the end of last year, that was around the time that China surprised us all by reopening. I think the data this morning from China, it's one of the first hard data points to see how quickly China is recovering. And look, that is going to be a global growth engine, and that's going to help everyone, I think. And so I think that's why everywhere recession risk is just falling just a little bit.
So the strategist got it wrong because the economists got it wrong. Is that what we're saying? So there's not going to be a recession?
No, well, look, I think the reopening of the global economy, and China was the last bit of it, was always a kind of it was an unknown.
Well, did people towards the tail end of last year didn't think that China was going to reopen at some stage?
Not as quickly as they did, no.
Right.
And look, this has been one of the most unusual cycles that we've had. We've never shut and reopened an economy, and so forecasting that has been very difficult.
Yeah, but a large number of people got it stunningly wrong. We've got get that piece of copy again.
Which
We've got the worst performance from active fund managers this entire millennium. Admittedly, it's only 23 years old, but
yeah.
they couldn't have got it more wrong this century. It's the worst performance from active managers this century.
This is a UBS copy as well.
This is UBS copy.
UBS is a big feature of our programming this morning, it seems. But
yeah, State Street bigger. We should talk more about State Street and the shares last night.
In a research note on European asset managers, the analyst wrote active equity funds domiciled in Europe generated an aggregate negative 4.13% of alpha last year after management fees, the poorest annual result since analysis began in 2000.
Why go active if they're so awful?
Well, look, I mean, I think right now, going forward, obviously, you're trying to figure out where growth is coming, and I think particularly right now in EM, there's a real opportunity in EM right now because EM is significantly undervalued still, and investors are under-owned EM for quite some time, and so the fact that China may be leading the global economy away from recession, that might be where people begin to allocate.
Let's talk about Europe for a moment here, because I know we were just chatting while Steve was at the wall, looking at some of the stocks about inflation and how sticky inflation is or isn't at this point, and whether the ECB is going to have to be in the game of hiking rates for longer than the Fed. Just give us your thoughts on what occurs here and how we need to tailor portfolios as a result.
Yeah, I mean, it's been really surprising to us this year. Maybe it's something that we can measure, even if we haven't forecasted, Steve. It's just this idea that prices in Europe so far this year have looked on a very similar trend to what we saw in 21, which was a strong year for inflation, in a very different way to the US. So in the US, actually, we've seen not quite as fast as disinflation as we wanted, but definitely disinflation. And so it looks like the inflationary process in Europe is a lot stickier. And obviously the ECB has been slower to raise rates, and I think that there's a much stronger case that the ECB has to keep going while the Fed may be pretty close to a peak. And so there's definitely, I think, implications in the FX market for that. There may be even a little bit of a drag on European stocks from that as well if the ECB has to remain hawkish.
So you're convinced then the dollar just continues to fade against the euro and against the pound?
Yeah, I think the dollar could remain under a little bit of pressure. I think we need to get through the idea, we need to get through the next FOMC meeting and just get some sense of that we have got the peak in US rates, but we're a little bit concerned that investors are still overweight the dollar and are beginning to kind of reassess it.